coronavirus. Welcome to our third episode of the See, Feel, and Know the Markets, or as I like to call it, the Max Investors Podcast or YouTube channel. They don't like it, I like it, but if you feel that it should be called the Max Investors Podcast, go ahead and comment below. Be sure to subscribe, like our page, send it to a friend if you feel that this content is helpful or just entertaining. Now, I'm your host today. My name is Everson. With me, I have Patrick and the yours truly, Max. And so we'll be our traders for today. Real quick, just wanted to talk about a story that I went through this weekend while going through Sears. Excellent sales, by the way. I managed to be able to pick up a curtain rod, and like the coronavirus, it's also made in China. But without further ado, getting started with the show, the disclaimer. Now, myself and Patrick, we aren't licensed like Max is. Max has his license 36 and all of this. So just take this as entertainment purposes. You do understand that the risk of trading could cost that your entire investable assets. So just trade at your own risk. But how was the week? I mean, we had a tough week last week. What did you guys think? What did you guys think of last week?
Go ahead, Patrick.
Anyone can start. I just.
Well, obviously, we had another roller coaster week. And what's interesting is that there hasn't been 2 up days since the beginning of February, right?
Yeah.
So
Max did those calls. The 3 bulls and 2 bears.
Yeah. So at this point, it's almost like you almost expect that if there's a up day, the next day is going to be a down day. Even though, like, even if the news are good, it seems like it's just been either it's profit taking or I'm not sure exactly what causes it, but it's very hard right now to line up 2 up days in a row. So we saw that last week, right? Monday, Wednesday, and Friday were down, at least on the Dow. I know that the SPY is a little bit different, but so I did what I usually do. I just rolled down when oil was down, and I did a few puts on. I rolled down my Royal Caribbean puts,
right.
so I cashed out on those, and then the next ones are expiring next week, which we might talk a little bit later in our expectations. But so I just tried to, get a little bit of cash flow like that, avoid big plays, that can be costly because it's so difficult right now with the volatility. I know that volatility has gone down a little bit on Thursday and Friday, but the swings are so big that it's very difficult. Right. Like, you can very easily be on the wrong side of the trade. And since we're not like multi-billion-dollar hedge funds, we're not big market makers or anything. So you have to be careful.
Our trades really don't move the markets. I like that. I like what you're saying, because I too played that with staying in cash and a market sell-off. And it wasn't just myself. I've seen a lot of friends of mine that also plays the markets, and they stayed in cash. How about for you, Max?
Well, I think we talked a little bit about how the market was going to slow down. It's growing a little bit tired, and so that's what last week was. It was taking a break, just going on the sidelines, taking a couple of sips of water, and so there's a huge support that we were talked about last week at 233. If you're looking at the SPY. And so it's going to take a lot of energy for the bears to actually break through that, which, if you actually saw on Friday, they finally broke through that point, which we're going to talk about a little bit later, and what that means. But the market was tired for a while. And so, like Patrick and Everson were saying, it was just all over the place, just because it would go down one day and the next day the bulls would come back and push it back up. The reason why that's interesting is now the market's already taken its break. So now we're going to see where the market really wants to go. The news will have a big impact on where that goes. But just thinking about it, I think next week you can actually start getting back into your routines of predicting where the market's going to go. It's going to be a little bit more predictable. I think we're going down. But if you were exposed last week, you might have lost your shirt. So just for fun,
I definitely
apart from
threw
what
out the
I.
pillow on that one.
So what struck me about that is that even the big stimulus like that they announced, I know that it didn't pass yet, right? But even with $1 trillion announced, that still wasn't enough to jolt the market back up, right? It only
Right,
slowed the downfall. I thought that was
right,
pretty noticeable. What do you think, Max?
So, I mean, that's a lot of money, but it's not going to affect the investors. The investors want to see that the businesses that are investing in are safe. Just to give you an example, I love this soup called pho. It's spelled PHO, but I had that 2 nights ago, and the homeowner's crying because I was the first person that went there in the past 2 days. Think
you
about
know,
that.
it's really sad, and I'm sort of glad. I mean, I'm saddened at that fact because it's never good to see business owners suffer the consequences, especially if it's something that we really don't have control over. This virus, we don't have control over to be able to just change the conditions of what's going on. And so, my heart goes out to those that are suffering. All jokes aside, I one of the things that I noticed when I walked to the mall this weekend was some jewelry shop owners. You had three associates that stayed in the front of the store, and they looked so sad, like their business was shutting down if they couldn't make the profits, or maybe they whatever the case might be. I don't want to speculate on anything, but they
They
just
might
looked
be
really
on
sad.
commission.
They probably are on commission, and I'm sure that just to make ends meet, it's a tough thing for a lot of people, and it's sad. But to your point, I see that happening too. There's a lot of people that will get hurt in this process. So, I mean, you know, free platform. We're here to help people out. Just take it for what it's worth, and it is making money, but at the same time, the idea is not that we're making money off of profiting off of people's losses, but I don't know about you guys, but um, giving back at some point, I think this platform really does that to just give back to people, that there is an opportunity for you to be able to make money regardless of the circumstances or conditions. So
Yeah.
share it with your friends, man. Share it with your friends.
Absolutely. I mean, can you imagine if you guys had a platform like this when you first started to listen to? I mean, I would have loved that.
I'd eat it up. I'd be all over it. Subscribe, looking every day. I'm not just saying it.
So I did want to add that. So it sounded the past 2 episodes I was the most bullish out of the three of us. We were all bears, but I was a little bit less bearish than you guys. But I'm
Sure.
actually going all out bearish now. And the
Okay.
reason is it's not what's happening around the world, including the virus, that is causing me to be so bearish. It's our reaction to it. There are many ways that we could have limit the exposure of this virus, and we haven't done that. Simple measure would have been with gloves. Everyone wearing gloves, that would have reduced the exposure by 93%. But we didn't do that. Instead, we decided to panic and have, this little business owner crying because nobody's showing up at her door. So that's a path we chose. So I'm very bearish now.
And I'll be
Yeah.
the contrarian because I was the most bearish of the three, and now I'm flipping
Don't
around a little
say
bit.
it.
Oh, I am saying it. I think that yes, the market's going to stay bad for a while, right? And the crisis isn't going anywhere. But it fell down so sharply, so quickly that, as you mentioned yourself earlier, my feeling is that the market's tired right now. So we're expecting pretty serious news this week about the unemployment, and we'll start
Right.
getting big companies' earnings and everything. The numbers are going to be atrocious, right? They're expecting maybe as much as 2.5 million employment, new filings. But I think that we already expect it, right? The market kind of priced that in. Tomorrow we should get the big stimulus. Instead of 1 trillion. We're talking about possibly 2.5 trillion. So eventually that's going to get priced in. So I'm still bearish about the market for a few weeks, but I think that we're getting to the point where it's going to start stabilizing. I don't think it's going to keep dropping straight down as it has in the past 2 weeks.
You mentioned something about being priced in, Patrick, and I felt the spear in my side. Uh, speaking of priced in, I made a mistake last week. I held on one of my positions for a call on Fro, and we were having this dialogue through text. Aside from the show, we keep in contact, but uh, I had invested and I held a call, in which case I should have sold it. And little did I know it was probably priced in. And we're looking at the stock of FRO, and the priced in part was maybe understanding that OPEC has already gone through so much to be able to bring down the price of oil. So it may look like sooner than later that oil is going to be offshored and out of vessels. Then what's the expectation later after that? Well, you don't got no business after that. So after that lease is up, maybe investors are looking forward in the future, and that's what's pricing in Fro, and that's why we're seeing a decline, regardless of how the earnings are now, and regardless of maybe the short-term expectations of what's to be expected with Fro. I think they're looking long-term, and I think that's how I got bid on that. I could be wrong, but as I look through the entire sector, North Tankers also is another company that's doing pretty successful. There's about 3 or 4 of them that I took a look at, and they're all sort of going through the same thing. So which makes me think that the entire market is already priced in with those type of tankers. So that was a really good point, being priced in.
So we know that as we film this, the futures for tomorrow are already down and already hit the limit, right? So they're already down 5%. So we can expect that the market's going to keep going down. Max, like that's kind of what you were saying. Now that the market almost capitulated, there's more downside potential. But eventually, like the forces of the market are going to come in. Like that $2 trillion worth of stimulus, getting money into people's pockets, getting loans for those businesses so that they don't shut down. And once the economy actually restarts, people can go back to work to like a business that still exists. I think we should see some sort of stabilization. Like if our government can actually get together and sign the bill, which we don't know. As of now, it's not even a done deal. So,
what do you guys think about the buybacks? Trump recently announced in the news that he will no longer allow companies to buy back shares of stock in their own company. How do you think that affects businesses moving forward?
Well, as far as I understand, the buybacks were only if they were receiving funds from the government, some bailout funds.
Right.
That's how I understood it. So if they didn't need a bailout, they were still able to do the buybacks. But a big part of the gains the market has seen in the past 5 or 6 years, a big part of that was from buybacks. Why? Because it was so cheap for companies to borrow money from the banks and just buy back their shares. So, in my opinion, if you're going to get bailed out, there better be some restrictions because in a capitalistic world, you haven't protected yourself against multiple fronts. And so, if you need a bailout, the thing is, if the government gets their hands on some companies, then we're becoming more and more communist. So that's a different conversation. But yes, I do agree that if the government's going to bail you out, you shouldn't be able to buy back your stock and increase your value.
How does that affect the company, though? I mean, oftentimes, and I agree with you 100%, but does it affect dividends at this point? Do you tap into making a dividend adjustment?
So in terms of the dividend, if the company's not allowed to buy back their stock, which artificially increases their value, then their dividend in terms of percentage-wise would still be pretty high. The other thing that I talked with Patrick this week is since companies are getting pummeled right now, a lot of dividend percentage is very high, which is going to help to create that bottom. But to me, that's still too soon for that. But yeah, I mean, I don't think it's going to affect the dividend in a negative way. I think it's going to affect it in a positive way because they can't artificially increase the value of their stock.
So just to add on that, what do you guys think about this theory where some people say that stock buybacks in this situation, right? And we're not talking about like 2, 3 years ago, but in this specific situation, stock buybacks would give confidence in the companies in the sense of here's a company that has cash, believes that the company is going to survive. So it sends a signal that the company or the CEO believes in the company, right? So what do you guys think of this theory?
Well, you know, I think that the buybacks would any companies that are not allowed to be able to buy back will not only hurt the stock potentially, but also, in my opinion, would probably hurt the dividend. I look at a company like General Electric where they went through some challenges earlier on in their production line. They were spread out too thin. They had money. They're so diversified that they had money in everything. And being that conglomerate, uh, elephant in the room, if you should say, um, it allowed their company to suffer huge losses. In which, at those days they had a little higher dividends than what they do now. I think they're under $1 in their dividends, if I'm not mistaken. Um, so I think that it'll affect shareholders, first and foremost, but it does affect the profitability. Um, and it's just like Max is saying, it's a tumultuous time. I mean, it's hard to really predict anything at this point. We're basing everything on the numbers, on data, on I don't think even earnings would even matter at this point. So the fundamentals start to break down, and now we're just looking at it as a technical. If I'm thinking this right.
So, quick question. Once we start seeing the earnings, are you guys, and you also believe that the rest of the investors are going to give companies a pass on the earnings? Meaning, they're going to show up with a report card that says, hey, I got an F or a D. And then the investors are still going to say, hey, you know what, this company's okay because they went through, what the virus brought to the market, the global economy. And so we're still going to consider this a pass, and the stock price is not going to take a hit.
I think temporarily, yes, but it also depends on what their prognosis is for the next 6 months to a year. And also, we don't exactly know how the stimulus package is going to affect like each individual company, right? So I think it's
Right.
really going to be on a case by case basis for right now. Like maybe on next show next week we'll have a different opinion, but for now I think that's the best way to think about it. I believe it's going to be very specific to each company and like how much cash on hand they already had.
Right.
Like also some companies are more diversified than others, even in the same sector. So we'll have to see. Some companies focus on one product. So if that one product is affected, it's game over for them. Some other companies have a variety of products. I'm thinking, for example, 3M. If I'm correct, I think they have 6,000 different products, right? So some of them are going to be impacted more than others. So we'll have to see. I think it's going to be on a case by case basis.
Real quick, I love that you say that next week we might have a different opinion, and that's showing the viewers that if we're looking at the data that we have right now this second, and we're making opinions and we're making possible trades based on that information, and as the information changes, our stance changes. And so
Right.
if we make a decision today and the information the next week is going to go against that, we're actually going to be flexible and make changes based on that. So I love that you said that.
I wanted
Yeah, you have
to.
to be flexible. Especially
Sorry.
right now with the volatility, the market sentiment goes up and down daily, right? So you have to really pay attention to what the move is for that day.
Yeah.
Try to adjust, like we talk about all the time, adjusting your position based on what's going on. And especially with now, it's so news based. Who knows? Like I know that some vaccines, or not vaccines, but some treatments are being experimented. So you never know. One of them might work, and all of a sudden next week the market's a lot more positive. It's so difficult to predict right now. We don't have a crystal ball, so you have
Right.
to base your stock market picks and everything based on the information that we have now and what's probably going to happen. But there's always that unknown that we can't predict, and that's what you have to edge yourself against.
Definitely. I wanted to talk about what happened with my trades last week, and then we'll move into the max charts. Uh, as far as last week, as you folks have known, I suffered some consequences. I think I traded out at the end of the week, probably up about just 1,000, 2,000 for the week. Uh, like I said, the biggest bad trade that I've done was probably trying to predict the pharmaceutical markets, and then also getting involved with the holding of my call with Fro. I think that the call with Fro, uh, here's the lesson, guys. For all you starter investors or beginner investors there, when you have a speculative market like this, you need to stay clear to your thesis, whatever that thesis might be. And I make some adjustments because the market's always moving. The price target's always moving. It's never going to be, analysts might say, oh, you make an analyst adjustment to what A and B should be, and I think it should be price point at this. It doesn't always hit it. And analysts are just as good as being speculative. So there's no right answer for anything, but sell short. Sell short meaning take profits, because greed, unfortunately, greed is the only thing that wins the market on a week-to-week basis, especially with the speculation that we have. So it's a learning experience.
Wait, Everson, real quick.
Yeah.
Have you ever lost money taking a profit off the table?
No.
There you go.
No. And that's why this is the Max Investor Show.
No, there's just this saying. Oh, sorry. There's just this saying, everybody knows it. It's, the bears make money, the bulls make money, and then the pigs get slaughtered. I mean, that's just how it is.
Absolutely. It doesn't hurt to take a profit. Words from the guru himself.
I'm just passing on words that I've read somewhere.
Yeah, Warren Buffett mentions it even. Well, Warren Buffett mentions a lot of things. But moving on to the chartist, what do you have for us, Max, on the Max charts?
So, I just love to start my week looking at the SPY. And in fact, I always look at the SPY starting my day, because my whole perspective is going to be based on what the SPY is telling me, what the charts are telling me. And then once I create my bias, then I start funneling down into the sectors to try to decipher what matches with the SPY and what doesn't. So last week, the big number was that 233 on the SPY, and it took us 5 full days to finally break it, to actually close below that level. Now that we've closed below that level, well, the other thing that's really interesting is that the quick moving average almost crossed over that slow moving average, which means that the sentiment of the market would have been a little bit more bullish. And in retrospect, then we would have used that 233 level to bounce back up. But that didn't happen. It was such a tease. But now we've broken below that 233 level, which means that support is no longer valid. The last hope, if you're a Star Wars fan, the last hope for a bull market would be if tomorrow, which doesn't look likely, if tomorrow we skyrocket up. And the technical term for that, I mean, there are many different terms. I just like to call it a crack and snap. So you have a support, you crack below that support, and the next day you go straight up. That's where the bulls are tired. They're like, we're going to win this war. And it actually creates a turnaround, a pivot point. But to be honest, I don't think that's going to happen. So now that we've broken that 233 level, my next support, which is a little bit soft, is going to be at 212. So that's roughly 16 points on the SPY from where we are at right now. So that's 6% or so. And what's interesting is that since I'm calling it soft, I actually think that we might go back down to the next support below that, which is going to be 218. Now, if you're a big bull out there, you do have another hope that if you look at the hourly chart on the SPY, you have a double bottom. So even though it's crossed below that 233 mark, there's a chance. So they say in the market, if you have a W, that's a bullish sign. If you have an M for murder, that means the stock's going down. So that's the difference between a double top and a double bottom. As of here, there's a chance, very small chance, probably like 5 or 10% chance that we get a double bottom, which means that you could start investing in stocks like or sectors like discretionary, consumer discretionary, industrial, and tech. Um, right now, energy sector is coming back up, and so the reason is because oil is so cheap, and they can't go that much further. Although as of right now, I think oil's dropped 8%. So if the market for some reason starts turning bullish, the first place I'm looking at is the energy sector.
Right.
But since I don't think that's going to happen, I'm going to stick more into um, the consumer staples, uh, utilities, not so much. Um, oh, the interesting thing that I want to talk about, what I noticed last week, and this is already delayed information, so you can't really take action on that for this week. But the reason why discretionary came up last week is people were buying supplies to work from home. In fact, Best Buy had to change some of their systems in order to accommodate for that. So I don't think that those purchases are going to last much further than next week. So I don't think those stocks are going to benefit from that. But that's something that I learned from last week. So basically, an overview, we're looking at the SPYs broken down at support. We have a soft support at 212, and I actually think we're going to go down to 180, 182. And so, make sure that you're not in bullish trades because you're going to get hurt. You're going to get hurt.
You just scare a lot of people, Max.
Well, to add to that bullish sentiment, I don't mean to add fuel to the fire, but this is just an update on Bloomberg. I'm looking at Bloomberg, and on March the 22nd, which is today, at about 11:51 a.m. I think this is
Eastern time. Okay.
So they've announced that they're blocking the Republican bill for stimulus package. So the Democrats have blocked the bill. So that adds a little more on the fear factor for the bulls. I think at this point, with all of the news that's coming up, it's inevitable that we're looking through, for a bear market.
Yeah, the Democrats wanted a little bit more language that protected the employees and that kind of stuff. So tomorrow might pass, but we'll see.
Right.
Yeah, so that was my prediction. My prediction is tomorrow is going to be a bloodbath, to be honest. Because every weekend in the past few weeks, like you have all the negative news, right? And for example, now the number of casualties is going up and doubled almost in the past week.
Right.
So of course it's going to impact the market. Everyone is fearful and everyone wants to panic sell on Monday morning, right?
Right.
But I believe that during the day they're going to get into an agreement, and then either Tuesday morning or something like that, it's going to start stabilizing, and it won't drop like falling knife scenario anymore. So tomorrow's probably going to be down pretty big, and then Tuesday more flat, kind of like Thursday, I believe, of the past week.
But guess what? Doesn't matter how bullish that day is going to be on Tuesday, like you're predicting. But now we have a new ceiling at 233.
Yeah.
So it would have to be very bullish news in order to break back through that resistance if we don't do that tomorrow.
And that's one thing that we talked about this week, is that the further down it goes, it kind of skews the percentages, right? So when it dropped from when the Dow was at 29,000, if it dropped by 10%, that was 2,900 points. Well, the further down we go, like 10% is a smaller and smaller number. But that also goes for the reverse. When it's going to go back up, it's going to be a lot tougher to make big gains, because 10% of let's say the SPY at 228 as it was on Friday, it's a lot lower than 10% when it was at 280, for example.
How do we feel about the expectation moving forward in the week? I guess we could start off with you, Max. What do you think looking forward in this next coming week? What are you buying? What are you selling? What are you looking at?
Ooh, buying, what's that? I don't know. Because this week, I believe that it's going to be a bearish week. If you're buying stocks, you better be a dividend investor, someone that knows what they're doing, because it's definitely too early for that. And so, just to give you Patrick's example, I think Royal Caribbean, on my thing, it says it's getting a 13% dividend.
Right.
13% is insane. I mean, a dividend, you're looking at maybe 3.5% to 4%. And now you're looking at more and more companies that, once this whole crisis is over, will have a very good chance to come back at least 75% of their losses. And you're picking them up with 13, 15, 20% dividend.
Right.
So if you're a beginning investor, that sounds quite appealing. Although I still say, wait till the end of this week, because this week could definitely be a bloodbath. My expectation is probably 10% chance that tomorrow's a bullish day, maybe a little bit less. If that's the case, that changes the entire week. That puts the bulls in control, and could actually definitely do some damage to the bears, to the short sellers. But like I said, the moving average was just a tease last week as the market grew tired. So for this upcoming week, make sure you're either shorting stocks, you're buying puts, you're selling calls. Actually, selling calls sounds like a pretty good strategy for intermediate investors and above. If you're a new investor and you have the knowledge of options, go with puts. Consider your whole investment into the put as your total risk. So make sure that you have enough room in the charts to at least get $2 to $3 on air for every dollar that you're investing. I'm not saying put your whole portfolio, but let's just say that you have $100 and you're putting $10 to buy puts, so that's 10% of your investment. Consider that whole $10 your risk in that investment, and so you're looking to make $20 or $30, and make sure that the charts give you enough room to the next support to make that profit.
How about for you, Patrick? What's your predictions for this coming week?
Yeah, so as I was mentioning, I believe that tomorrow is going to be down pretty severely. But, as I mentioned earlier, I'm a little bit of a contrarian right now. So when it goes down, I think tomorrow at the bottom is going to be a decent opportunity to pick up some stocks. If you see something that's a bargain, tomorrow might actually be a decent time before they announce all of the provisions of the stimulus package, while people are freaking out the most. So right now, I do have puts, right? I bought puts on AMC, and the reason why is at $3 strike price. The reason why is because I didn't really see why it went up to 350 from its bottom.
Right.
Just because it was the anticipation of the stimulus package to bail out this industry. However, right now, the CEO said that they have zero revenue coming in. And since we don't know how long the crisis is going to last, this can last for weeks, months, who knows. So
Right.
I'm holding those puts until at least tomorrow. We'll see what happens, but I'm pretty confident about those. Not feeling as confident at all about the puts on Royal Caribbean because I sold them. So I believe that tomorrow is going to go down. So I might have to roll those down or just buy them back.
So, Patrick, you mentioned real quick that tomorrow is going to be a bloodbath, and there might be a point tomorrow where there could be some good opportunities to start buying.
Yeah.
Would you say to buy your full position at tomorrow for a specific stock, or start scaling in? Meaning, let's say you want 30 shares, start buying maybe 8 or 12 and start scaling in.
Yeah, I agree with you because of the fact that there's so much uncertainty. You don't want to be caught holding the bag, right? But I think it's a good opportunity to open your position get some shares, and then from then you can see the momentum. If the momentum goes up, you can buy more, and if it goes down, you can average your cost down. So I think you're right. Like, don't put all of your money tomorrow, but you can initiate a position if you see something that makes sense that you think is going to rebound pretty strongly in the future.
That's a great point.
I think that, you mentioned a lot of good points. I think that be very careful with buying bargain or bargain hunting, rather. You'd want to buy best of breeds, I would think, especially with the uncertainty. I know that, in the long-term effects, this is going to strip the middle class. I've known business owners that, the basis of survival was essentially on the numbers on a day by day. Much like how some people have been living off of paycheck to paycheck. I see business owners, some that have been living off of paycheck to paycheck. So some of these businesses won't come back. When we look at it on a grander scale and a bigger marketplace, like your brick and mortar stores, like your Sears and Macy's. Now, Macy's has always done a really good job at being able to get itself out of the mud, if you would, and they've been able to bounce back. But we constantly see it with Macy's, where they're just playing with the numbers every year. Sears, on the other hand, there's not a lot of confidence in with respect to Sears that they could they weather the storm. I'm not too sure. I don't see the numbers.
This is like their third life.
This is, it's a cat, and I think it's on its last string. But were you done with everything that you had to say, Patrick?
Yeah, I mean, mostly. Aside from that, of course, as usual, I'm looking at oil. I don't think we're going to get a pretty good week for oil, just because of the fact that it's very complicated, because there's so many contradictory forces right now. On one hand, you have the government that wants to shore up the price because it's killing U.S. shale, right? So a lot of people want the government to maybe place a call to the Saudi Arabia and maybe Russia, like kind of blackmail them a little bit into shoring up the prices because it hurts us too much.
Right.
But at the same time, as you mentioned with Fro a little bit earlier, we haven't even received those first shipments. As Saudi Arabia produces 1 million more barrels per day, Russia was planning on increasing their production also, which also forces all of their competitors to lower their prices. There's just those contradictory forces that I think is going to keep the price down for now, unless eventually, once they do place that call, once they get into an agreement, it's going to go back up significantly and very quickly. So I'm kind of cautious about it. I don't want to, I want to edge my risk a little bit, because I think it can go back up pretty quickly. But for now, I think it can also go down pretty quickly, because we're talking about, I believe, 10 million barrels less demand per day. So that's fairly significant. And once they fill up those strategic reserves, well, there's nowhere to put the oil. So the only thing that they can do is sharply drop down the prices to create artificial demand. So that's why for energy, it's going to be a tough week, I think.
Well, it's interesting that, I mean, Patrick is so good keeping up with the information, especially in the oil sector, and I'm very different from that. That I'm way behind in information from Patrick, and so what I look at is what's actually showing up on the charts, and so there's chances that the news will actually predict what's going to happen to the price and say, hey, it's going to go up, and so Patrick has the edge there over me. But sometimes the news is just going to be, fake news or whatever, and it's going to create that speculation, and it's going to create that false sense of stability. And I don't see it on the chart, so I'm not acting according to that information, and I'd be one of the few people that don't get hurt. So there's different ways to see the market, and both ways are correct. You just have to make sure you commit to which way you're doing.
Right. Good. As far as what I'm trading this week or this coming week, I have some March the 27th expirations for puts. majority of them are puts, so I could be heading in the right direction as of Monday. Uh, I'm big on puts with Lyft and Uber. I also have some puts on Plug. It's a battery making company. Uh, CGC, a marijuana company. I have CLF, also AMC. After a collaboration with Patrick, I decided to do a puts also on that. It's just, one of the things is when you look at shutting down malls, and even if they own their own real estates in that area, it still it has a false hope for the future for them, because like I said, they're burning through cash and everything. And I don't know how the books look like as far as how much debt they're in, but you got to be able to pay the bills. And it's my understanding that lenders have the ability to be able to push out maybe 30 days on a not being able to, you won't have to do a payment for the month, but on a month by month basis, just to see how everything goes. So, those kind of terms with the debt and being able to pay off debt and being able to have forgiveness with paying off debt is purely up to the creditors or the lenders in this process. But still, at the end of the day, people have to make money, and money is going somewhere. So where do you put them at the same time? Uh, I know that AMC, they have a dividend of 3.76% dividend yield at the end of the year. That's pretty high for a sector, in my opinion, where they're not making a whole lot of money within the month. And who's to say what that balance is to profitability, and how much that 1 month actually did affect it? Because I'm sure that the prolonged experience after all of this virus has been said and done, there is a sentiment of uh, mistrust behavior, mistrust that I don't know if I should go to the movie theaters now. Maybe I should wait a month or two. You know, so there's a lot of speculation there. So that's why I
Well,
chose to go on a puts with that.
Everson, real quick, I wanted to say that right now, if you're going to start buying, it's bargain shopping time. It's getting
Oh yeah,
discounts. And so,
oh
what
yeah.
did you say that dividend was for AMC? You said
I think it's
3.2.
I think it was like 3.76. Let me
Yeah.
take a look real quick.
So if I'm looking to buy a stock, I'm not even looking
76.
at AMC. Right now, your dividend, if
Yeah.
you're dividend investing, your dividend should be at least 7 or 8%, just because of the huge discount. So if I'm seeing anything at 3, 4, 5%, if I'm investing for dividends, I'm not even looking at those companies.
There is a company that I've taken a look at that was brought to my attention over this past week. It's actually yesterday, and the company's stock ticker is called um, OKE. Stock ticker OKE. It's one OK Inc. And just looking at the 5-day charts, it looks like it's balanced out. On a 1 month chart, it looks like it's declined from its highs of about maybe 76.51, and now it's down to $20.62 per share. It was up on Monday. It'd probably be down today, but the dividends that they're offering, just scroll back real quick here. The dividends that they're offering was 18.25% dividend yield at the end of the year. Uh, it might be something interesting to look into. Like I said, invest at your own discretion, but the stock really hasn't moved in the last month. So I might be buying into this one, and it's rated as being very undervalued. Of course, everything these days is rated as being undervalued. It does have a 62% estimated return over investments, but I might be a buyer of it. I'm not too sure. I have to go ahead and take a look at everything
I'm
a little more.
I'm glad you brought that one up. It's very interesting. Just looking at the charts, very interesting.
Yeah, very interesting.
Hey, Everson.
Yeah.
Everson, just to go back to the list of stocks you were mentioning earlier, one of them being AMC, as we were talking about. One thing that I noticed, and that's kind of what I've been looking at too, is it seems like a lot of the stocks that you're looking at are stocks that went up or down sharply, maybe a little too sharply, in the sense of, people,
Oversold.
yeah, oversold or overbought. For example, AMC went up significantly on one of those days. Uber went up significantly on news from the CEO that they had a lot of cash to go through the crisis and everything.
A lot of confidence, right?
Yeah, so those are great news, right? You want the CEO to say that. However, maybe it came up too quickly for the situation we're in. Is that something that you look into as well?
Yeah. So I've changed my strategy moving into this time of recession, and my strategy has become something where I'm no longer going long on all of. I'll go long maybe on some of my positions, but if I'm going long on some of my positions, I have the sentiment in mind of where we might be turning towards, and I just in the big picture, I don't see it going to a bull market, but at the same time, that's not to say that there can't be fluctuations within the market also. So if we look at the point in place with Fro, I had a long-term expectation. I held the stock for a couple of weeks, thinking that I could create another value again. But like Mighty Max said over there, the pigs get slaughtered. So I mean, you're either a bull or you're a bear, and take profits. Take profits as soon as you can. So this is why I'm pushing more towards gearing myself to a day trade instead of just or a swing trade, but swing trade within the week. I don't want to hold a position longer than a week. I don't even want to hold a position longer than 3 days. If I could, I'll sell it out maybe 1 to 2 days on a swing trade.
Yeah, the reason I was asking is it feels like the pendulum shifts too much in one direction and then comes back too much in the other direction. Right. So, for example, AMC, like it went down to 185 or something like that. I don't have it right in front of me, but went down very low, and then on some news, it went up to 350 right after that. I feel like the shift is too quick, right? So it should retrace a little bit, and then eventually it's going to go back up. So I feel like a lot of the stocks that you mentioned seem like they're in that pattern too. They dropped falling knife scenario, then they shot up a little bit on news, but based on nothing like concrete. Like the situation didn't improve positively since the past week. So that's the only thing that's came up to me looking at your list that you were mentioning earlier.
Well,
that's a really good perspective.
So I wanted to add to that is, yes, in terms of news, there's no information that's going to help you become more bullish with the investment, except price. And so the lower the price is, the bigger the incentive is to get to that, to buy that asset. If you have a house that's worth 100,000 and it drops to 90,000, only a few people are going to buy it. But as it keeps dropping and it gets down to like 35,000, how many people are going to be willing to buy that house? And so even if the news is neutral, doesn't say anything, or it could actually still be bearish, but there will be so many people that will find so much value in that cheap investment.
Absolutely. But on the other end, if from that 35,000, the day after that, it shoots back up to 70, you're probably going to think maybe it should be 50, not 70 right away. Do you agree with that statement?
Yeah, but then I would sell out and get out of there, and I don't know, I guess it depends. I'd have to throw like a Fibonacci retracement on it. But I don't know if I wasn't in the investment, I saw it go from 35 to 70. I don't know if I would be willing to say that it's going to go from 70 to 50. I would just stay on the sidelines for that.
Yeah, it could be. My idea is that the people that bought 35 might actually want to sell for profits and get out of that position. So it's going to go back down a little bit. And then eventually, once it stabilizes, then we can talk about momentum upward, like longer lasting.
Yeah.
I agree.
So basically, the moral of the story is that this crisis makes me be very skeptical of very sharp up or down, because it feels like it always levels out a little bit downward right now, but it's not in one direction. If it goes down sharply, it's going to go up a little bit or be stable for a day, and then it's going to go back down. Do you see that too?
Right. No, I definitely see that. I see the volatility in every stock that I've invested in, and to be honest, I did spread myself a little too wide last week. Um, it's just hard to keep a perspective in a whole lot of stocks. So I think with consolidation, it works also to be able to have a good perspective in the market. But there's definitely a lot of volatility going on, and some volatility, it just doesn't make sense. We could ask ourselves, maybe it's priced in, maybe it's institutional spending, maybe it's company buyback or whatnot. Having that third level insight without having that third level insight is probably one of the hardest things to do. But we trust our intuitions and everything, and I think that's what makes us unique, is that we have the tools and such to be able to make an educated decision. It's just um, I think it helps if we consolidate a little better and we try to understand the, like you said, retracing of the stock and everything. That totally makes sense. I agree with it.
So you said last week you were probably a little too spread out too much. And so the previous episode, we talked about how the market might be going through a tired stretch, more of a channel stretch. And so what did that mean to you, and how did you process that?
A tired stretch?
Yeah.
Well, I could kind of see it myself. I I think maybe institutional funds dry up. I think maybe this is just hypothetical, but I think institutional funds dry up. The stimulus package doesn't make it to American citizens, doesn't make it to individual companies. We can't rescue businesses as to the redrafting of the way the language is with this new stimulus package, right? But nonetheless, just that fear factor. I I think we see the floor fall out. I think we see at least 10 to 15% drop in the markets overall. And what happens after that, it's anyone's best guess, right? I mean, should we fall in dire circumstances where we're falling into 20%? I say that the president calls for, no shorting of stocks, no puts, no more buying puts, no more shorting stocks. That's the best thing that can happen for the stock market, because the only thing that you can do is buy. That's the only thing that you can do. So what do you look for at that point? You look for high dividend stocks, high dividend payers that can pay out their dividend religiously.
Boom. He's dropping some knowledge, you guys. Take some notes.
I've seen it before. But in our wrap up, you guys want to finish off on any closing statements, and then we'll get to our pick of the week. So that's where Max here goes and determines what our expectation would be for next week. Although I think this might be a challenge. Any closing comments there, Patrick?
Yeah, I'd say just look for opportunities this week. Always be defensive, but the more it goes down, the more you can look for bargains at this point, because of the fact that a lot of those stocks aren't going to go to zero. Like, there's few companies that are going to go bankrupt. So look for the ones that are in a good spot right now. And tomorrow we should see a pretty steep decline. So I'm going to look for something to buy tomorrow personally. Yeah, maybe not something that's going to, I'm not going to invest all of my money into it, but, I'm going to look for something to put a little bit of money, like not too risky plays. And later on this week, we'll reassess. But
so you're talking about stock buying, or you're talking about, buying a few calls here and there to see if it goes up?
Well, I'd start buying actual stocks, but on a negative red day, not when people are, exactly as I was talking about earlier, not when people are all buying at the same time and it goes up. I'd do it at the bottom as much as possible, because yeah, you might lose another 5-10%, but that's the point I was trying to make earlier, is we dropped so low that each percentage point is less money than it was before. So 5% loss right now wouldn't hurt you as bad as 5% 3 weeks ago, if that makes sense. So I feel like your risk now is a lot less than it was 3 weeks ago or this week. because there was a lot more room to drop. Now, the lower we go, unless the market totally capitulates, which I don't think it will, but you know what I mean? Like there's less and less space to go lower. So I see tomorrow as potentially a good buying opportunity.
I like that. So Patrick is bargain shopping. Max, what are you doing this next week?
Running away, man. I am running away.
The roles are totally switched.
Yeah, absolutely. Absolutely. So I did want to go back a little bit to that SPY chart before I made the weekly prediction or whatever. So what I was going to say is that, well, so we did talk about the 212 level is going to be soft. Who knows if it's going to hold? But looking at the charts, it's tough. It is tough because if that holds, if we do have a down day tomorrow, which is like 95% chance, that 212 might slow it down a little bit. So we'll only go down 6 or 7% for the week. In terms of bullish days, we're gonna have another 2 bullish, 3 bearish. And the reason I say that is, you have more and more people like Patrick that are going to start bargain shopping. I'd love to say 4 bearish days and 1 bullish day. The reason I can't is because that support's very tight to it. It's very close, that 212 support level. If there was a little bit more space for the bears to just dominate, then, we could finally see that 4-1. That is very good for short sellers, but I just don't think we're going to see it next week. Now, don't take my little prediction as word of God, because the reason I say that is because next week, who knows what's going to happen? The charts are all over the place. If you're looking at a specific timeline, a time frame, it shows that the SPY is going to come back up. If you look at a bigger or smaller time frame, it actually shows the opposite view. Like I said, we might be forming a double bottom, which is very bullish signal. But I don't think we have the resources for that to happen. We're going to go down. And who knows if tomorrow we'll have the good news where the government is going to approve some help with the markets. So I'm going to go with 3 bears, 2 bulls. I still think it might be too early to start bargain shopping. But if you are like Patrick, make sure that you're scaling in. And again, what we're trying to do here is just share with you the conversations that we're having through text and sometimes phone call, so that you guys can learn, improve, and level up to the next level as a trader. And what we ask is, since we're sharing this with you guys for free, if you do enjoy this and you're learning something from it, make sure you bring a friend, send it to friends so that they improve as well. And then we can have that conversation and grow exponentially and share what we see in the market. It'll be great.
Hey, Max, but as far as the, what are you looking to particularly buy? What are you particularly looking to sell maybe? I know you said you're running for the hills and everything, but is there anything in particular that you're looking at? Any I know you were saying that the sectors that you're looking at was, you're looking at consumer staples, you're looking at the energy sector, you're also looking at, did you say utilities?
Yeah, utilities, consumer staples, health, stocks. I would stay away from industrial, tech, and discretionary. The reason I say that is because those charts were actually very positive. And so if you're predicting that the market's going to go down, you want to stay away from those because they don't match the sentiment of the rest of the market. So you want to stay with the flow instead of against it. So yeah, I would look at the utilities, consumer staples, health. Yeah, that's about it. Now, the script's going to flip if tomorrow is a big bullish day. For some reason, that 5% chance, if it's a bullish day, on the chart, on the SPY, you're going to see a big bullish engulfing pattern. You're going to see a double bottom. you're going to probably see a cross of the fast moving average above the slow moving average. All these signs are going to be very bullish. And so you're going to have that nice bounce off that 233 level. Then I would go into industrials, tech, telecommunications, and discretionary. But I don't think that's going to happen. So stick to consumer staples, short that, short the health, short the utilities, because that's still going down.
Well, there you have it, viewers. Thank you for tuning into our podcast / YouTube channel. As Max has said, be sure to subscribe, like, and share with a friend. If you want to follow me on Instagram, I do have an Instagram page specifically for investments purposes, and that's trust_this_process. Trust_this_process. So you can feel free to go ahead and follow me on there. Otherwise, I do have financial coaching or money coaching. I probably accept maybe about a few more positions available. So you're welcome to reach out on our, leave a comment or such if you're looking for advice, or just hit me up on the Instagram. Send me a message there. Max, you got an Instagram that you want to share, Patrick?
Not right now, but just in conclusion, I think this week's going to be really interesting because we'll see what market force is stronger, unemployment or stimulus package. Should be fireworks this week.
That's awesome. Max, any final thoughts?
If you guys want to have that conversation with me, you can start following me at Stock Rental on Facebook. But other than that, I think this week is going to be very similar to last week. There's a lot more profit to be made this week than last week, just because last week was a lot of sideways movement, unpredictable sideways movement. I think this week we're going to pick a direction and go with it. And so tomorrow is going to tell what the week's going to look like. If tomorrow is a bullish day, I'm going to flip my script and say it's going to be 3 bulls and 2 bears.
Well, there you have it. I'm Everson, your host. We got Max and Patrick. Have yourself a great week. Make sure to take profits and stay on the green side.
Have a good one, guys.